Welcome to Colorado Law. As you've just heard, yeah, that's there. As you've just heard, I am the Dean of the Law School. I am in my third year here, and it has been an incredibly eventful 3 years. As I like to say, this is singularly the most difficult job I have had in my entire life, and at the same time, it is also the very best job I have had in my entire life. And so I am deeply pleased that I have the opportunity to be before you today as your dean. And I'm also so very proud and pleased that Silicon Flatirons is hosting tonight's event. Before I go on, I want to share with you our land acknowledgement. As we gather, we honor and acknowledge that the University of Colorado Law School is on the traditional territories and the ancestral homelands of the Arapaho, the Cheyenne, and the Ute peoples. Further, we acknowledge that the 48 contemporary tribal nations historically tied to the lands that comprise what is now Colorado law. With that, I want to say that we are really so very proud of the startup community that convenes here at Colorado Law and at Silicon Flatirons. In regard to startups and investment, I don't want to miss a second to plug a wonderful event that we have coming up this Thursday. I invite you to come back on Thursday night as Professor Andrew Schwartz, who I saw somewhere in the audience, there he is going to be delivering our 48th annual Austin W. Scott Jr. Lecture. Professor Schwartz is a leading expert on crowdfunding. He will be talking about, I'm sure, among other things, his new book, which, by the way, I am deep into. I'm really enjoying that. He's going to give his public lecture this Thursday at 5:30 p.m. here right in this room. So if some of the topics that we talk about tonight grab your interest, I believe that you will be even more grabbed by what you'll get the chance to hear on Thursday. Thank you all so very much for being here. I know, and especially as the weather gets nice, and because so many of you are engaged in so many activities, professional, personal, community, there is competition for your time and your attention, and so we appreciate you. I offer special thanks to all of our out-of-town guests, and that includes Mark Hardy, who's the director for the Center of Private Equity and Venture Capital at the Tuck School of Business at Dartmouth. I also welcome back to CU Boulder, Sherrard Harrington. Sherrard is a CU alum, and he's founder and chairman at emcee. And side note, I asked Brad Bernthal to find out how to pronounce that because I thought it was either emcee, like in Mandarin, or emcee, like in Greek. I don't speak those languages, but I do have a daughter who does. And so we were sort of trying to figure out which one it was. Thanks to your follow-up, Brad. I know it's neither one. Thank you so much. Thank you so much, Brad. I thank both of you, our special guests, and I thank each and every one of you for making the very special effort to be here tonight. Now, as always, I want to thank our Silicon Flatirons team, Brad, who is our executive director, and he's still relatively new in the position. I have to say, he is amazing. Thus far, Brad, I have not met a single person on campus in this community, or frankly in the state, who does not know you. And there are a lot of people across the country who also do. We are so fortunate to have you, to also have Nate, Shannon, Christine, Kenzie, Sarah, and our student volunteers. And I thank you all for making this happen and for making so much of our programming happen. Thank you. Now, one of the inspirations for tonight's program is that we have some CU Boulder students who attend startup community events. We are very lucky to have that level of engagement from our students. And sometimes what our students say when they come back is, you know, that event was great, but I don't necessarily see a lot of representation from diverse communities when I go to these kinds of events. This is especially noteworthy to me. Now, as I've shared with some of you, I come from a family in which some of their members got their starts right here in Colorado, and not long after the US Civil War and up into the 20th century. And in fact, my paternal grandmother used to regale me with stories about how amazing Denver and this whole region was when she was growing up in the early 1900s. There were not huge numbers of people of color, especially not Black people, but I can tell you that communities of color were deeply engaged in business enterprises and in founding and in making things happen. Some of the most famous entrepreneurs in the history of the United States spent time working in and creating businesses right here in Colorado. This includes people like Madam C.J. Walker, you may have heard of. She is the Black woman who founded a hair care, what can I call it, extravaganza. She made millions of dollars on hair care products that she sold, that she marketed, not just in the United States, not just in Colorado, but around the world. And a really weird side note, I have an ancestor who used to work for her, and he was an amateur filmmaker. I recently came across some of his films where he went to Madam C.J. Walker's hair care salons and sort of filmed what was going on. He did this all over the world. This woman was the first self-made millionaire woman, not Black woman, the first woman to be self-made as a millionaire in the United States. And she started her business right here in Denver with, as what they say, was as little as $1.25. It was probably more than that. But recognize that Madam C.J. Walker and others like her, that was the norm. Then and now, the Front Range, Boulder, Denver, Colorado, these were places where people came to make business and do business, where people from all sorts of backgrounds and all sorts of communities have come to. Now, one of the questions that we're going to be talking about tonight in that vein is, how do we make the startup scene actually look like it used to look 100 years ago? How do we make the startup scene include all sorts of people from all sorts of backgrounds? How can we include, first and foremost, more talent? Because people think, oh yes, diversity, diversity. Diversity is nothing without the excellence. I say that a lot about what we're doing here at the law school, with both our students, with our faculty, and our staff. We don't do diversity without excellence, and similarly, that's what's true in the business world. Excellence and talent and diversity have to all come together, and that's what we're here to talk about. How do you make those things true? How do you create more opportunities for all those amazingly talented people who are out there from all sorts of backgrounds? Now, on this issue, I want to call your attention to the Silicon's Flatiron Startup Summer Program, which brings together undergraduates to build new companies during the summer. Startup Summer includes a Next Stars initiative, which focuses on support for underrepresented and first-generation students. For $7,500, you can help sponsor a student for a summer internship and an experience launching a new company idea. This program is creating a pipeline for underrepresented students in the startup community. And for those of you who want to know more about this program, please speak to our own Brad Bernthal, who can tell you more. Tonight's variety show will highlight individuals from underrepresented communities who are building companies, funding ideas, and investing in startups. Our experts will examine issues that challenge greater inclusion in the startup ecosystem, such as capital access, investment gaps, social networks, workplace preparedness, and other concerns. Now, having said all that, I want to get you to one of the true highlights of the evening. It is my pleasure, my great pleasure, to introduce Henry Wright, who is our guest host for tonight's event. Henry, thank you so very much for coming tonight and helping this to come together. And we really look forward to the great discussion and discussions, plural, that are going to ensue. Thank you all.
I haven't been in front of a crowd this large in a long time. So I'm gonna use my glasses. So I worked at a 10-year-old startup probably 20 years ago called Vocalect, and we were global. And I was thinking about this morning, and for my welcome, I'm gonna try this out. Bonsoir, buenas tardes, welcome, guten Abend, Swahili, Abrezagiani, buonasera, and welcome. This speaks to the global nature of business today, enterprises, and startups. Entrepreneurs are everywhere, and we need to take note. My name is Henry Wright. I'm not going to go into my background, but a fun fact. And Vish Mohamran, you cannot answer this question. Fun fact about me. Does anybody know who my first startup was with? People Express Airlines. The CEO was Don Burr. It was funded by Hambrick and Quist, which eventually merged with JP Morgan Chase out of San Francisco. People Express was featured in 2.5, maybe 3 books by a gentleman named Tom Peters. Anybody know who Tom Peters is? MBA students know who Tom Peters is? Gray hairs know who Tom Peters is? He wrote 3 books, 2 of which were, first one was In Search of Excellence, second one was A Passion for Excellence. And Kay, if you can help me out with the third one, that would be really great, but so we'll just go on from here. I'm really glad that everybody's here, both physically and virtually. And one of the things that I want you to leave with that I've learned over my career in life is you need to understand the past. Okay, you need to understand the past so you know where you're going. Okay, my friend Mark is going to touch on this a little bit later. The reason why I bring that up is I had dinner with him last night and we riffed for a minute and I'm like, yeah, you're absolutely right. Also this morning, I was looking at LinkedIn and I follow this woman named Rachel Kargas, Kargas. And what today is really about? Today is about opening doors for those who never had a key in the first place. Opening doors for people who never had a key in the first place. So I have 3 questions, only for students. Only for students. What's a keiretsu? Any student can answer. Raise your hand quickly. $25 gift card on the line. Any student, raise your hand. Grayson, give it a shot. Come get your $25 gift card to Starbucks. Come on up. Second question. Who in here knows what SUN in the acronym Sun Microsystems means? $50 gift card. Okay, who's got it? Yes, sir. $50 worth of certificates. Okay, last one for the students. It looks like we're, their increments are going up. Last question. What does Boulder Valley, the Front Range, CU, and the state of Colorado all have in common? There's a theme here. Pretty close. One more. Not physical. Could be virtual. I'm going to give the card to you. It's a $100 gift card for Southwest. Just in case. Okay, so what do those things have in common? They're about systems, they're about networks, and they're about ecosystems. And that's why we're here tonight. And with that, I will turn it over to Brad. Thank you.
All right, so we're just about ready to get going. I want to say a few final things before we start the event. First, a shout out to our supporters at Silicon Flatirons. They're listed online. If you see people in the community who are behind us, please say thank you. It's a big deal for us. Also want to recognize my colleagues, Keith over here, and a warm welcome back to Dale Hatfield, who has not had his customary chair for a few events. Great to have each of you guys here. Charlie Kelly and Stiefel Bank helped with tonight's event specifically. Please say thank you to Charlie and ask him about their work in the startup community. This is an experimental format for us at the variety show. How many of you have been to a variety show before? All right, so about 2/3. This is going to look probably nothing like the last one that you were at. A couple of things about tonight. Not everybody's going to agree. We got some people with different stories here, and we're going to have some individuals with different perspectives. I think that's going to be one of the things that's going to make this interesting. Some of the topics might be sensitive. And I ask you that we have some respect for different people's experiences in the startup community. The format is, for each panel, we're going to start with a keynote, about 5-6 minutes. We'll have a response, about 3-4 minutes, and then we'll have a panel discussion around it. Moderators, I'll ask you, in addition to the questions that you have, to loop in questions from our attendees and participants tonight along the way, and we'll try to make it as inclusive and participatory as possible. We're going to do this in 3 parts. First, issues about capital. Then we're going to take a break. We're going to get some sweets, sugar up, and come back in. And we're going to take up second panel, which is going to be the entrepreneur's perspective. And third, we're going to close out with workforce preparedness, and then we'll have a reception to follow. Good problem to have, trying to pull things together. It is my pleasure to welcome our guest, who, as the dean already introduced, is in from Dartmouth. He is the director at the Center for Private Equity and Venture Capital. Please help me welcome Mark Hardy. Mark.
Thank you, thank you, thank you. Students in the room, raise your hand. Students, undergraduate students, okay? Around you are brilliant people who actually will talk to you and will help you. So turn around and talk to some of the talent that's in here. I just had an introductory session and was amazed at the group of people we've assembled. Kudos to my good friend, Henry. This is going to be a great session. I'm excited about it. And so I have some notes, and I teach a venture capital class at Dartmouth, at the Tuck School in their bridge program, okay? So those are graduates of undergraduate programs. They've been out of school for a little bit, and they're thinking about business school, okay? And I teach this class to them because it's more than just, I have a great idea, I have to talk to an investor. It's a lot more than that. And so there are 4 questions that I weave into my class to try to get students to understand that your brilliant idea is not the sole deciding factor for a VC. In fact, it's probably pretty far down the list. That investor is going to go through a number of different calculations and what we call due diligence. And so for you, for all of you students here that are entrepreneurs at heart, that are wannabe founders, or maybe some of you want to be joiners, I'm going to talk about that in just a second, you've got to try to get into, to better understand, to learn how to talk to and to interact with and to enjoy the relationship you're building with an investor, because that's exactly what it is. It's not I just met you and I'm going to invest in your company. It's, hey, let's keep talking. Hey, come back and talk to me later, okay? So these are the questions, and I want you to write them down or make notes, because we'll try to use these as a way to get our panel to really engage in back and forth. And a great point was made. We disagree. We don't all agree on everything. So there may be a different answer to this question from one of our panelists, but that's perfectly fine. Because as you go through life, you're going to meet a number of different people as you pursue your dreams, and some will tell you one thing and some will tell you another. And if each time you get one decision or another decision or another thought, you get confused or you get stymied, you're not really recognizing sort of what the path is like. A lot of different decisions and thoughts, and you sort of weave them together and figure out what your path is. Okay, so here's our 4 questions. What can we learn from recent history? Henry brought it up a minute ago. What can we learn from recent history? You as students thinking as entrepreneurs, what can I learn from recent history? What motivates the private investor, okay? There's a difference between a private investor and federal or public money. So you want to be sure that you're starting to think, what motivates that private investor? What are the keys to accessing capital? Can I create a list? Are there short notes that I can take that work for me? Okay? And then my final question that I use again in my class as I talk to undergraduate students, recent graduates, am I an entrepreneur, a founder, or a joiner? Those are three different personalities. Entrepreneurs comes up with ideas all the time, but might not be that great business leader. A founder is probably the person that's going to run the business. And they're tackling that. That's their sweet spot. That's their talent. And a joiner is arguably that ops person that just give me something challenging to work on. And over the course of your education and your development as an entrepreneur, you're going to find out, you're going to figure out, you're going to eventually reach a point where you say, hey, which one am I? So I'm going to take 2 seconds to give you my answers. And then I'm going to turn, and Sheila's going to respond to my answers. She's probably going to tell me wrong, not right, but almost wrong. And then we're going to use that, I think, as the basis to get going on our panel. And then I encourage all of you, there's brilliant people in this room, I would love the students to just get a question ready, okay? Because I met Cody, and I could cold call on him if I wanted to, because I know his name, but I won't. All right? All right, question 1, when I think about what can we learn from recent history? If you missed it, the tech boom is continuing to boom. It is going like crazy. I had a great conversation just before this. We see each decade things happening that really fuel capital investment. And in my career, I just sort of watched it happen, from PCs arriving in offices, to a standardized operating system, to one network that everybody uses, and then one application to access that network. And then really smart, talented individuals who weren't at work figured out, oh, I could do social stuff on this. I could do a lot of things with this browser that my mom or my dad at work never does. And so you see, as the aughts, the zeros, social media takes off. And then after social media takes off, I would argue businesses caught up and decided, well, let's put it all in the cloud since it works and we're all on the same network. So now SaaS anything is the boom that hit, right? And now I know you all want me to talk about AI because it's the acronym du jour. Forget about the acronym du jour. Think about the difference and the change that happened with internet, then browser, then social media. AI is not going to be what you think it is right now. It's actually going to be people like you figuring out another way to do something with it. And that's what investors are looking for. Not something from the cover of a news magazine. They're really looking for you being able to do something different with this new technology, okay? And it's going to keep happening. So when I say, how do we pay attention to history? Why does history matter? Because we have a track record of it. And if you talk to any investor who's been at it for a long time, they'll point to a number of different sort of eras or changes that took place, okay? That's sort of my thought with why we pay attention to history, recent history. What motivates the private investor? I've raised capital, which is kind of cool. Got a private investor to invest in me, $3 million. That was a lot of money. What motivated that investor to invest in me was more than just I had an idea for a way to distribute entertainment digitally. What motivated that investor was that I had pulled together a team of talented individuals. What motivated that investor was I had a background that actually compared what was happening on the internet with financial services prior to that. And so that investor got to know me, and in doing their due diligence or studying or why they might invest, they really started to see, hey, not only is this an individual and this is a company that has the potential, but he's looking for the right amount of money. He's trying to just get to this next point. Let's help him get there, okay? Investors are on funds. Funds have life cycles. All the investors in the room know this, that it's a 10-year cycle classically. And you as an entrepreneur need to understand that when you meet that investor, they may be somewhere in that cycle, that will determine whether or not you're the right investment for them at that time. So you've got to know sort of what drives that investor, where they are in their cycle, whether or not you're the right talent or you're the right team. It's rarely you've got this brilliant idea, all right? To me, if you ask me whether the keys to accessing capital is to turn away from that question and really start to look at who you are and what you're bringing to the table, who you've pulled together on your team. Maybe you're not at a team yet, but what have you brought to that opportunity to interact with an investor? What are you bringing? If you're solely focused on, I got to talk to as many investors as possible because they have the money, you're missing out on one key thing, which is it's more than just you have a great idea. You really want to step back and look at what resources are available to me, what networks, what ecosystems, what incubators, how do I ready myself for that? And I think that's why we've got this great panel and the discussion that we're going to have. The last point, am I an entrepreneur, a joiner, or a founder? Anybody consider themselves a joiner? I'll ask that one. Excellent. Hands up if you're a joiner. You think of yourselves as operators. You think of yourselves as, I want to be next to that person and get the job done, right? That's critical. Because in all the meetings and all the discussions I've had with investors, they're really trying to evaluate whether or not you're the one to lead the company. And if you're not the one to lead the company, then who did you bring to this? Who are you putting around you? Okay. I consider myself a joiner because I'm an ops guy and I really like that. But some of you are idea oriented and can keep coming up with ideas, and so be that entrepreneur. All right. Some of you are, in fact, truly founders, and maybe you'll do that a couple of times. But it's important to figure out that distinction, I would argue. All right? That's how I think about it. Everybody here thinks about it probably differently, and so this is going to be fun. Excellent. So I'm going to turn to Sheila. She's going to respond. She'll probably chastise me, maybe, but let's get going.
Thank you. Is this on? Can you hear me? Awesome. Okay. I took a little bit different angle at this whole panel, and I focused more on access to capital for underrepresented populations. So I did a little bit of research and created this fun little colorful heat map. So this is the 10 largest MSAs in the United States. And this was put out by a VC firm in Chicago called Chicago Blend. It's not really, it's a 501c3. So trying to get more capital to underrepresented populations. So just they ranked which cities fund based on gender, like which cities, like Chicago is dark green, so they have, of all the deals they've done between 2018 and 2023, they have 36.5% went to women. So they win. So you can see the scale on the right. So the dark green is the one who had the highest percentage of all deals going to women, and Atlanta is the number 10 on that list. And then it broke it down by race and ethnicity in general, so the broad category, and the winner was Miami. There you go, Sherrod's from Miami. And Boston was last. Latin founders, again, Miami, which makes sense. Sometimes it makes sense, right? Because you're very close to Cuba, have a big Latin population and so forth. And again, Boston. Black or African American, Atlanta, again, there's a big population there, and Seattle is last, and Asian American and Pacific Islanders. San Francisco was the winner with the highest percent going, and Miami was last. So I also looked at Harlem Capital in New York. If you want data, go to their website. They share everything. They have a drop-down menu called Reports, and you can get all the data you want there. So I was just kind of trying to to handicap this by the size of the markets. So just because Chicago gives, on a percentage basis, more deals to women, doesn't mean they give the most, they have the most women get deals, right? So because New York is a much bigger market. So even though New York is third, they're going to have more, from a proper number, more women get deals. So I just wanted to kind of set the stage with kind of where activity is happening in the market and where people of color and underrepresented communities are getting funding. And now I just want to step back and just, for the students especially, I want to provide a little bit of context. So in 1974, so 50 years ago, the Equal Credit Opportunity Act was passed. And that meant women could have credit cards. Think about that, right? If you're 50 years old in this room, or if you're older than 50 years old, right? My mom couldn't have a credit card. And that's just such a fundamental, like, we take for granted that anybody can have a credit card and anybody can access credit and things like that, right? But 50 years ago, a woman had to have a man sign for her. So in 1978, they extended that to include race. So 4 years later, excuse me. In 1986, sexual harassment was considered discrimination. 1986, that is not very long ago. So there are standard, and now I'm going to respond to Mark's 4 questions. That's my setup. There are standard questions. The founders are not standard, right? So I think, if I went through your 4 questions, Mark, I would say that relationships are the most important thing. You can have the idea, you absolutely, I agree, have to have the team, but you have to go in there and you have to show them, you have to build trust, and you have to show them that you have the grit. We had this conversation yesterday. I think was it yesterday? It was a long time ago. But just saying, if you go in there and you demonstrate that you are a person that's going to overcome any hurdle, you don't care, right, how many doors are slammed in your face. You don't care, that you get good at hard. What was this? Should have watched more carefully. But you're not waiting for the easy bus. Founders cannot be people who are waiting for the easy bus. And so it's a little bit of a softer approach here than Mark took, but it's really about building relationships and being able to tell a story. Especially if you're in fintech or any kind of tech, you still have to spin a story, and you have to make it compelling, and that's your hook, right? If you're not looking like, that it's a grand idea that's really addressing a problem, they're not going to, whether they like you or not, they're not going to invest in you. So I was I don't have all the slides up here, but I was looking at some investors, and then we had a nice reception before this, and I was people introduced themselves, and I noticed a theme, right? The people who are on the ground every day, living life, it's not easy. They're not in the easiest class of people. They're seeing problems that need to be addressed. And so when I was doing research about founders, like Gerard, there was one founder, and he and a couple of buddies just started a blog to talk about trying to access the tech industry. So they were just trying to help anybody, people of color, underrepresented groups, to access the tech industry. And it just kept going and kept going and kept going. And then finally, it ended up as a startup called, I'm gonna cheat and look at my sheet. So his name is Reuben Harris, and it's called Career Karma. So what started as, I'm just going to help you out, like maybe I just got rejected, or maybe I just got funded, or maybe I don't know, maybe I got this job in a tech industry and I didn't really have a traditional background. So they were just out there like sharing ideas with people. How do we get in? And all of a sudden it turned into this startup that's just this massive startup. So, and very successful, called Career Karma. Another woman, Arlen Hamilton, was homeless. So she was sitting on the floor in the San Francisco airport, homeless, and she decided she was going to become a VC. And she did it, right? So that's the grit. That's she saw something, that other people weren't seeing because she was there on the ground. I mean, literally that, I didn't mean to say that. That was kind of not intentional. But, she was seeing what people struggle with. But in both of these cases, they're firsthand witnesses to need. And that's where the ideas are going to come from. You're not going to get an idea in an ivory tower, right? Unless, I don't know, maybe you will. But some of these things that get very popular and help a lot of people tend to be from our underrepresented groups as far as founding. So my point is, why bet, and can we go to the next slide, please? Okay, so 2 slides, and I am wrapping it up. So, so why bet? Why bet on underrepresented groups? And this one is the qualitative answer, right? Because they have the grit, because they are living life, they are experiencing these things, they see the need, and they see a lot of other people with the need. So these are just some quotes from people who are out there funding these people, and it's really compelling to just go look some people up who have just made it through, and there's huge opportunity. And the next slide. So the quantitative this is from a McKinsey report in 2023. Well, actually 2015, 2018, 2020, and 2023. They're doing this Diversity Matters series. And you can see that they're looking at, this is not about just startup companies, but this is about just diverse teams. And the outperformance, so they're looking who performed in top quartile and who performed in bottom quartile in whatever industry they're in. And the outperformance of diverse teams has grown every time they've redone this study. In the case of having women on the team, it's gone from 15 to 39%. In the case of ethnic diversity, it's gone from 35. It took a little dip, and now they're both at 39%. So you're going to outperform. So this is the business case, right? Grit, passion, and outperformance. That's why you want to bet on people.
I'm here to moderate. I didn't get the memo that we were supposed to be up while the presentations were going, so that should make you all feel really good about my moderation skills. Let's do a little bit of housekeeping really quickly. To the panel, because we haven't talked and really met yet, we're not going to go I ask a question, we go down the panel kind of thing, and we should ask each other questions. To the group, I'm going to look up at you all a bunch, and that's your cue to sort of give me a little high sign that you have a question or you want to jump in, because I think this will be a lot more interesting if we have a sort of a collaborative conversation. Other housekeeping note for you all is I was going to do introductions, but we're already into it, and I think that our bios are in your package somewhere, so let's just go with that. Can we put back up the first slide that Sheila shared, though? Because I want to start with a question that relates to that. And I'm not going to necessarily throw it to anyone, but Sharon, maybe I'm going to throw it to you, because I think this will be interesting. We have a few different perspectives on this panel, right? We've got a couple people that have raised capital that are entrepreneurs. We've got a couple of us who are investors. A couple of us are sort of on both sides. We've got an academic comedian also. That was a great, you can tell the people that stand up in front of large classrooms. And I love that everyone who's a teacher, and everyone who's a professor has already done this at least once, which is either called on someone or threatened to call on someone. So if you know me in this room, then I'm going to channel some of that, and I might call on you. So first, I just want to call BS to this chart a little bit. I don't think that this chart does an accurate job of reflecting just how poor, certainly the institutional capital world, has done at funding women and people of color, right? Because you look at this and you say, Boston's pretty good at gender, right? Or no one has a deep red on funding Black and African-American founders. Well, that's just BS. Right? I mean, if you look at the percentage of people who are Black in our population relative to the percentage of dollars that flow to them from the venture community, no one gets a green. Everyone should get a dark red. So let me start with that, right? We talked about, the dean talked a little bit about being deliberate, like we make decisions that are deliberate. Why is it that in our institutional capital stack, we have done such a crappy job of getting money to a broader set of founders? Who wants to jump in on that?
I'll take that one.
Okay,
I'll take that one.
I'm going to call on Mark next because
Okay. I think the biggest thing is me and my colleagues, we talk about something called trickle-down capital. Trickle-down capital is where these LPs, they have the capital. They have to give it down to the GPs, and the GPs have to give it to the entrepreneurs. There has been a divide. I've been saying it since I've been a student here at CU. When I was a former athlete, injured, and just looking around to these community members, a lot of these members around here opened up with open arms to me. And I've always had this connotation in my head. I wouldn't say it was a negative one, but it was that if I go into a community that I'm not really truly a part of, where I feel like based on my color, my skin, or whatever the case is, where I'm from, I knew individuals like Seth and Brad and all these guys will open me up with open arms to address this specific question right here. And it's really an educational aspect, right? We need to teach these LPs that's in these environments that can deploy capital, that diversity is special. You know, I remember when I was a student at CU, and I see that the young lady up there actually is a part of Catalyze. That was a startup that a classmate of mine, Fletcher Richmond, that was an engineering student, wasn't a business student. I wasn't a business student. I couldn't become a business student because I played football. They wanted to make sure I was focused on that. And I ran into a barrier where I couldn't even get into leads. So from that point right there, I could have said, man, I'm not going to be an entrepreneur because I can't even get into the business school where all these successful people are coming out of. But that never stopped me. So it goes back to the point that you addressed, Mark, knowing the difference between a joiner, an entrepreneur, and a founder. And in addition to that, just knowing the difference between a private investor, like the different categories of what a private investor is. You may have your individual LPs who are angel investors. They believe in you, they trust in you. And then you may have a VC that actually get capital from their LPs, so they have a specific mandate. So it's a whole different environment. I love to hear what y'all think about that as well.
So let me ask, Mark Patterson and Natalie, let me ask you guys this, and I'm going to frame the question slightly differently. We've been talking about funding underrepresented founders now. Really, I've been in venture for 24 years. Sorry. And we've had a few waves of talking about it. Now we're really talking about it the last 5 years or so. And then you look at the stats that just came out, and particularly Black female founders, who, by the way, start more businesses at a higher percentage, businesses writ large, not just tech businesses, than any other group of people in this entire country. They actually went down, right? It was like 0.6, and then now it's like 0.2 or something like that. So what's going on that even though we're talking about it and everyone's like, yeah, we're going to do this, and there's funds popping up to focus on these areas, what's not working?
So something that comes up for me is a lot of the decision makers, the GPs, the folks with capital, if you don't have diverse folks and women playing with capital, you're not going to see it flowing to those folks in the community. Let me give you an example. And I brought this up the other day, and I know it was something that resonated with Sheila, but recently I connected with, I'm an investor, I connected with a founder. She's Afro-Black, new mom, woman, starting a business. And she tells me that the investors she's speaking to, she's a new mom, a few weeks out of, giving birth. She says, they're not giving her any time and they don't believe that she can, run this business. And what blows my mind, and by the way, I'm not a mom, but any moms in here, what blows my mind about this is the grit, the resiliency, the amount of work that goes into, wow, I'm going to have a family. I'm a new mom. I'm starting and launching a business. And I think what happens is if you see these decision makers in capital allocation roles who don't understand maybe how women show up, how diverse folks are coming to the table and asking for capital, you have this massive disconnect. So I do think a lot more people are talking about it, but until you have folks who are LPs, who are demanding to say, we need more capital going to these places, and maybe crowdfunding or some of these solutions will help on some level, the numbers are absolutely atrocious. And I just think we need more diversity and more gender representation in these capital allocation roles. Because guess what? Men, are they going to care as much about women's health? Maybe not, right? But when you get women to the table, wow, capital allocation's happening. So that's how I think about it.
Yeah, I would add, kind of jump on that. Can you guys hear that? Part of it is top down and part of it is bottom up, right? So when I meet a lot of companies, I like to tell them, you're going to meet a lot of people and the problem you're describing is not a problem that they have. Therefore, they make the human leap to understand, like, if it's not my problem, then it's not a problem, right? So from the top down, it's important, especially for students, to understand, Seth and has very famous venture capital fund, and they would probably like to believe, people think they probably have more power than you actually do, right? Because you answer to LPs, and it's an ecosystem of people from the top down. So driving awareness at the top level that there are problems that need to be solved that those people may not know about is part of it. There's also part from the bottom up. Capital, I don't care if you're a startup or if you're series A, B, C, or D. Whenever I've met a capital provider, the most mystical topic is how do we access capital, right? And the next one is always the hardest one. And so from the bottom up, from these communities, this idea of I'm gonna go and raise capital in a startup, you might as well say I'm gonna go to Mars. They don't even know where to start, right? And so groups like this, education, understanding, well, you start to raise capital by meeting someone. I wrote down one of the things that I always like to tell people, think less about if you want to raise capital or start a company, think less about trying to convince people of something that they don't know. Find people that already believe what you believe. And those pockets of capital are starting to bubble up. And my hope is that the top down and bottom up will begin to meet.
So I'll just say one thing, which I say to people all the time, which is not to necessarily disagree with you all. And I recognize that I have the power of having been in venture for 23 years and a $3.5 billion fund, and I'm a white male, I've got all of that stuff. But I think if we wait around, so one of the big mistakes that VCs make is they think they're the market, right? And that's always one of the challenges. We sort of argue about this sometimes internally or sometimes with other funds, that like they're putting themselves in the position of the buyer. And that's in part why some of this stuff doesn't get funded. Women's health, that's a good example. And what I say to my friends is, yeah, all of that's true, but we can't, I don't feel like we have time to wait for capital allocators to become more and more diverse. People think that our investors, limited partners, are in the risk business. They are not in the risk business. They're in the not risk business, right? They're in the capital allocation business and then in the fee business. And so we report to them, so they don't want to hear about risk, right? They want to kind of be close to people that sort of know something about risk, but that's not how they think about the world. So just a thought there. Sheila, you said something, well, two things. One, just a plug, Arlen Hamilton that you referred to, who I've known since she started her first fund, she wrote a great book called Do the Damn Thing, right, which I would recommend. There's another one I just read that touches on some of these themes. Sherrod, you talked about something that relates to this. Adam Grant's new book called Hidden Potential, right? It talks about judging people not by where they are, right? The legacy student who got into Harvard because their mom or dad or grandparents bought a building, but maybe the student that went to the community college but had to work all, the entire way, maybe they're a better risk. The whole book talks about that. I just want to kind of put a plug for that. So, Mark Hardy, let me ask you a question as it relates to kind of this whole theme, what we've been talking about. I want to talk a little bit about sort of networks and inclusion. And I'm curious what you see, because you're working with sort of the next generation, right? I represent probably 2 generations ago of the people that you're meeting. So what are they telling you about how they think about these subjects? And probably more importantly than what they're telling you, what are they doing? What are their actions? How are they interacting together? I don't know. I didn't look at the stats on Tuck to see exactly how diverse it is, but I would imagine that you do a pretty good job, despite being in the middle of New Hampshire, of attracting diversity. And so I would love to get your thoughts on that.
Well, the program is pretty diverse, and what we see with entrepreneurs in that program is that because they're coming from all over the world, they're happy to go back to where they came from, not in any sense that they have to. They come to the U.S., I think, and Henry made this point, they come for ecosystem. And our ecosystems are incredibly vibrant, whether it's Boston, whether it's Silicon Valley, whether it's Flatirons, whether it's Texas, those make a difference. You need a concentration of entrepreneurs, talking to entrepreneurs, and the tide kind of lifts all boats. But more and more, we're in a global economy. We're in a global, it's not a global ecosystem yet, but we're really getting beyond, I think, just move to Silicon Valley and start your company there. It really can be anywhere. And so if you ask me, well, what are the next generation of entrepreneurs thinking? They're thinking, how do I take what I've learned here and go and be an entrepreneur in Africa, or be an entrepreneur in India, or be an entrepreneur in Southeast Asia?
Probably more than anything that I've seen in the last 24 years now has been exactly what you just described, right? And we talk about the Boulder thesis, which is this idea of startup community, a great book that my partner Brad Bernthal wrote about this subject called Startup Communities. Interesting that we're starting with the capital panel, but one of the things we talk about is that actually, and this is why I directed the first question to Sherrod, is that entrepreneurs lead, right? Now you've got capital and your startup. But I think that that's something that's really important to what you just said, Mark, right? Like entrepreneurs are leading and they're now able to do this anywhere, which I think is really powerful. There is a question from the audience. I should have a gift card or something. Where's it? Henry, come on.
That's financial. So back to your previous question, specifically, I was curious, we're all familiar with the friend and family round, right? Which is a part of the system where VCs say, I first want to see your friends, your family, or someone investing in you, which kind of makes sense a little bit because you want to make sure that, you're not the first check they're seeing. That being said, I'm curious how this system is ever going to work for either people who have no access to people with money, or in particular, I had a chance to do some non-scientific research with women who literally do not want to ask friends or family for money. So curious about that kind of angle. And it's a barrier that is really hard to cross to the institutional money.
Before Sherrod jumps in, I just want to be really clear about the statistics, just because I know them off the top of my head. The average Black family has 1/10 the wealth of the average white family. The average Hispanic family has 1/7 the wealth of the average white family. This holds true, not quite as extreme, but still quite extreme. This holds true if you hold for level of educational attainment or income of head of household. So I just want to frame that, make sure people understand just sort of how big that gap is.
Just to answer your question, I think entrepreneurs' mindset has shifted just COVID. I'll say they want to move away from getting capital from VCs, and instead, Mark mentioned AI. Originally you would raise capital, initial seed capital, so that you can hire the engineers to go and build that MVP or get some initial customers. But now you don't need to do that at all. I mean, You can just sign up for GitHub Copilot, sign up for OpenAI and ChatGPT, and you can work with those engineers and sort of get your product, your MVP out there, get some traction, get some customers, and then you go to these VCs with some leverage. Now in this day and age, LPs don't even want to allocate to some of these GPs. Breaking news. Primarily because they don't want to allocate towards these models that aren't really, revenue driven right there. They're no longer funding ideas anymore. So I think it also creates further issues for underrepresented, where we have to be more entrepreneurial. We have to build. We have to utilize these tools to our advantage. And you don't necessarily need a technical co-founder to get your product off the ground. That's my initial take.
Can I jump into real quick questions? I don't know if you guys heard this, maybe I heard it wrong. And Seth, maybe I'll point this to you. Like, I think part of your question was potentially VCs want to see that your friends and family invested in you to quote unquote trust you. That hasn't really, I have never really come across that. It was more like you went to friends and family because maybe VCs didn't think the company was to where it's gone. Have you guys experienced that where like I want to see that your family has invested in you before they trust me? Is that a thing?
I've experienced. Oh, I'm sorry.
I was going to say the point that the young lady was making, I think, goes back to how we teach entrepreneurship. And we often say that there's this friends and family around, or the 3 Fs, friends, family, and fools, right? And that's very, that's very true. You're being told, you're being taught that before you go for an angel round or before you approach an investor, has your family invested? I don't have an answer to your question of how we change that, because I think it's actually getting harder. Because entrepreneurs now who don't know how to code are trying to, but have come up with an idea for something that requires coding, face literally a $200,000 hurdle. And I don't know many people who've got family that's going to come up with that, that amount of money. So what I heard in the question was, we're being told we should do a friends and family round before we approach the investor. Well, how do we do that? And I'll be painfully honest, I don't know that there's the answer. I think it's actually getting harder.
Real quick, just to jump in, I think angels now are stepping in and doing a lot more of what maybe traditionally was friends and family. I'm not saying it's easy, but we're also seeing some level of democratization of who is stepping into fund, whether it's Reg CF and the crowdfunding, whether it's angel groups stepping in. But I mean, listen, it's really tough to be first money in. So I don't think it's so much I need to see friends and family, but people have a different ways in which they want to allocate capital, and first money in is really, really tough.
I love that this subject has gotten us riled up. Amongst in addition to being VC, I'm also actually raising money for a fintech startup that's sort of trying to address some of these capital access issues. And I'm actually very directly hearing people say, and maybe it's because they think I should just fund it myself, and I have funded a decent amount of it already, but I was like, I kind of want other people around the table, and we're going to raise a friends and family round because we had a bunch of institutions say, friends and family. You talk about Reg CF, I think there's a bunch of things. Come talk to me at the break, because I've got some ideas on, from a policy perspective, what we can do to at least make it a fairer playing field, which I think would be helpful. Bunch more audience questions, so whoever has the mic closest to them.
I was hoping we could talk a little bit more about the context of the time. So we have the Fearless Fund, right? The suit against them for what is it, like $20,000 grants? So we're talking about like a drop in the bucket of all of the VC funding that goes out to all entrepreneurs, and we're having them being attacked. And so we're at a really interesting time when it comes to the conversation that we're having, which is how do we have more support for diverse people, both in capital allocation and entrepreneurship. And I would love to get your thoughts on the context of this moment in time where for Latino VCs, I just came from Stanford where we talked about this, it's like 2%, right? When we talk about female entrepreneurs, we're not even close to 50%, 2%. Like that is wild. When we look at women of color entrepreneurs getting funding, we're looking at like something like 0.3%. So, and when we look at the data, when we look at these groups of people, they are actually starting more businesses and they're having more success. So it's like this intellectual disconnect between the data and the actual, like the funding that's happening. So if you could speak about context in terms of what's happening now, and that just like very clear disconnect between the data and the people that are getting funding.
All right, I'll jump in. I'm actually writing a book, right? So I wrote a book about the changing nature of entrepreneurship. More women, people of color, immigrants are starting businesses called The New Builders. Quick punch. But I'm actually writing another book that's a little bit related to what you just described. And what your question reminded me of is, so about a year and a half ago, Larry Fink, who's the chair of BlackRock, and they've been sort of in the middle of this stuff, getting sued by a bunch of states and all of that. He was at the Aspen Institute and he was talking about some of his views about climate, DEI, et cetera. And he said something that I thought was really striking, which is, we basically said, I'm paraphrasing, I will never use the term DEI again. It's been weaponized. And I think what you're seeing with Fearless, right? And, I think several of us, I'm sure, know those people. Like what they're doing is great. And there's a ton of, Camelback, Unreasonable. There's a million of other platforms that are doing similar things. They just chose Fearless. That is entirely around culture wars. It's why we use terms like woke and anti-woke, right? Those terms exist to try to polarize, and they exist because, if I could speak bluntly, because the entrenched white male patriarchy is afraid of change in what's going on. So on the one hand, maybe, I'm not excusing it, it's terrible. It's a sign that something's actually going right, like that they're scared enough that they're coming after this little fund. And by the way, I thought the fund's response, which was very public, you can see it on their website, was completely appropriate. And I was happy that they didn't just decide to hide behind lawyers and sort of be like, oh, we can't talk about it because we're getting sued. But when Larry Fink said that, and he's as powerful as it gets, right? He runs a however many $1 trillion asset management business. And it's one of the top 3 in the world, right? He basically, the BlackRock owns something like greater than 5% of every company in the S&P 500. They are the market. And when he is saying, basically, I feel victimized or weaponized by people who are weaponizing these terms, right? I think that's the culture war that I will describe as people on the right. I don't want it to be overly political, but that some people are trying to sort of drive that wedge. So I think it's entirely an issue of cultural challenges, not an issue of like real economics or real fairness or real freedom. And we see that in lots of different examples all over the economy right now.
Well, isn't it the same person who who attacked affirmative action, right? So it's the same person, the same group. So it's just the next step in the same attack.
Yeah, so we should pay attention, right? Leonard Leo, right, who basically architected the Supreme Court. Sorry to those of you who took classes from Neil, but he architected the Supreme Court. He now started something called the Teneo Network, right? And they're trying to do for business and anti-woke what he did for what the Federalist Society, which is what he started, did for the judiciary. We're worried about that. Mark?
I think fundamentally we'll move past that political discourse and debate, because I don't know any investor, I've never met an investor that would look at it that way, right? I think we have now, and we're at a place now where the entire investment community really understands what has to happen, and now are working toward how that can be structurally put in place, because it has to be a structure. It can't just be one-off, right? And so we're assaulted by the news, but the reality is if you sat and talked to any investor, I genuinely doubt you would hear anything other than what is on their mind, which is putting capital to work, trying to see entrepreneurs really develop companies, and then recognizing that we've been in a system for a long time that has discriminated against, and we need to move toward making that change happen. And it's not going to be easy. It's not going to be easy.
How do we get people to see diversity as alpha? Right? Like we think we're in the alpha business in the venture world, but the reality is we just. What's that?
How about the other chart that I put up from the
McKinsey
report? That's real numbers.
But it's not affecting it, right?
It's not affecting
And
it.
I think the real problem is that most
VCs
VCs mistake chasing beta for chasing alpha, and maybe that's. But I agree with you, Sheila. I'm asking the question to be provocative. Like, diversity is alpha, and there's a real argument to be made for it.
I think if you can see it, you can be it, right? I think you have to get more funders to be people of color, right? So that's upon the universities, right? It starts here. We train our people. They come out of Mark's program. They go hit home runs, and they fund people that look like them and everybody else because they know what it's like to not have that opportunity.
I think the other thing quickly that I think about all the time is that you have funders that are playing in these early stages, but then when you talk about funds or allocations to the later stage businesses, like it's basically how big is a check going to be, or how much is a check going to do if it's $100,000, right? There's a lot of capital out there that people need at different stages of businesses, and I do think you get this big fall off where like people that want to do good or want to invest in women and diverse folks, they're playing in these earlier stages because smaller checks do more then. But again, I think it's the bigger allocators and these bigger funds.
The problem is the money's not going there.
Right.
Someone had a staff from Harlan Capital. They're great, right?
Yeah.
And they're as mainstream as it gets, right? There was like 3 dudes from Harvard, right? It did a bunch of banking, other things, like, very much like if you're an LP and you're not in the risk business and you're checking boxes, like those guys check boxes. And they are focused on inclusive investing, and they raised $150 million, I want to say, right? And that was, up from their first fund, and that's by far the biggest fund that's focused solely on, that's run by diverse managers focused on investing in diversity. I just want to, maybe I'm just impatient, like I'd like to see us get there faster, and I think it's got it by definition because of that. I have $3.5 billion, it has to be my responsibility.
Yeah.
Right, and me, meaning I'm abstracting to my peers. John, did you have a question? Yeah. Oh, okay.
And well, maybe this is the good closing one. So I've heard a lot about the challenge and the effort to address greater diversity, support for diverse entrepreneurs. What are your solutions? I mean, what are the? I'm sitting here in a community that is recognized as not being particularly diverse, but yet recognized that it's key to our economic vitality. So, wondering what you would say as a panel about the solutions for our community to reverse the trend.
So let me build on that and break my rule. Let's go down the line. What is something you're optimistic about? And we'll end with that because we should end with some optimism.
I was going to give you a one-word answer, which is just teach. If you know it, teach someone else. It's not hard to teach. And what am I optimistic about? I'm optimistic about actually the faces I see in my class and the variety that's in that classroom. And so it's going to happen down the road, but I'm going to teach them.
I'm optimistic about there are alternative ways to find the information. So there's all sorts of apps out there. There's all sorts. So technology basically is giving access to people, for this information, teaching people how to get there, teaching people how to get into tech, which Ruben was doing, and I think that democratizes it a bit. They may not be able to have access to a 4-year institution, but they can learn a lot more online these days.
I'm optimistic primarily because I'm on this panel. I see guys like, man, this guy right here, he put this thing together, and Mark and all these women on the panel. I think right now, 10 years ago when I went to school here, I didn't see this. So I'm optimistic that I look forward to the many changes moving forward, even just at the university, just with the entrepreneurial endeavors there. I think there's going to be more entrepreneurs that give back. There's going to be alumni that love their university and will fund people that look like them or, that's different. That's my thing.
I'm optimistic about all of the women we're launching to become new investors and also the future investors, but I agree we can't wait. I'm optimistic that people like Seth talk about alpha and see these numbers, and hopefully we do start seeing some changes with, who has a lot of capital.
Yeah, I'm optimistic, 2 specific things. Kind of building on your point, there are now people running funds and they're starting companies that are starting that groundswell, right? But I think that, and Seth, please close your ears. I'm optimistic that the venture capital model is slowly going to be disrupted. And I would love to hear Professor Schwartz at some point in time on crowdfunding, because the model of venture has been built by these folks that are our age or older. And, I think there's probably been a bias, you would know more than I would, Professor, against crowdsourcing, companies that have raised money through crowdsourcing. I think that's going to change. And I think it's going to change very drastically. And then it's not about, well, how do I find this VC? And they won't take my call, and maybe I don't look like them. And then now you're not partners, like, I don't care. I'm going to go back to the crowd. And then by the time this company's big enough, the VC can't have it. You know, that's kind of what I'm optimistic about.
You might be surprised to know I totally agree with you. No, I completely do. And I mean, we recently announced we're not going to raise any more money. We're done raising funds. I'm going to retire from venture once the 10-year life cycle of our fund goes through. So in a couple years. But part of my own motivation for that was I see all of this dynamism in our funds portfolio, which is primarily diverse fund managers doing things differently. And I think that like old white guys like me suck up a lot of oxygen. And I just was like, rather than try to keep it going, let's just step out of the way and let new people with new ideas kind of take it over. And I think that should be the model for venture. I don't think venture firms should perpetuate themselves. I think we should move on, right? A certain like regeneration I think is important. And I think we see that. I see it in this room. I see it in the people that I interact with every day. And that gives me a lot of hope. This was great, guys. For 6 of us on the panel, that was pretty good.
We'll thank them again. We're going to go ahead and get the next panel started. We'll get the next panel started. Please come on in, find a seat. Thank you. It is a delight to see the conversations in the room as we get started. So here we go with the next panel. We're going to move into the entrepreneurial perspective about this. Delighted to have a colleague from across campus here to moderate, Bryn Reese. Before I turn it over to Bryn, in the announcements section, we have an entrepreneur who is taking photographs. Lisa, could I get you to give a wave? I invite you to look at Lisa's work. She is a super gifted photographer. In addition to the stuff that you'll see after our events, she's been taking pictures. She's got a wonderful, really incredible rock and roll collection, as well as a lot of very interesting photos from a number of different cultures. And if you'd like to take a look at that, I recommend the lumenproject.com, LUMNIN project.com. Lisa, thank you for helping us out as well. Lisa, yep. All right, so with that, Bryn, over to you.
Thank you so much, Brad, and thank you everybody for sticking around for the next session. We're going deeper. And the title of the session is Entrepreneurs Building Companies, Overlooked Partnerships, and Unusual Suspects. But I think we would probably all be in agreement that we've already started focusing on the founders, right? Session 1, access to capital, very quickly shifted the conversation to what about the founders? What about the founders who aren't raising capital? So how do we support our founders, and in particular, our underrepresented founders? We've got a great panel to get into that. We're going to have the same format as last time, where we're going to have a keynote speaker. That's going to be Luis Duarte, who I'm happy to introduce now. I'll introduce the others as we go. Luis is the CEO at Amufi, which helps people to tell their story. And I want to just a quick lead in to storytelling and its importance. When I think of the founder journey, it's like the hero's journey, right? Thinking about Joseph Campbell. And that started off for us tonight with our basketball coach from Duke, and talking about when things get hard, and the analogy to the hero's journey of, you know, everything that's comfortable, all of our tools and assets being stripped away, right? And when we lose all of these trusty, handy tricks and trades, we find a part of ourself that is new. And when so many of those things have been destroyed, we find a part of ourself that's indestructible. So when Joseph Campbell talked about the hero's journey, he was a pretty aware guy. He looked at all these different cultures and found that there are these themes that ran across the hero's journey and across different stories from different cultures. But what we also know is that journey, that hero's founder's journey, is not the same for everybody. It's not the same for our underrepresented founders. So we're going to dive into that tonight, and dive into starting off with Luis and the importance of storytelling.
Thank you. It's very interesting to be here, because I was in this same room pitching my second company almost 15 years ago with the Unreasonable Institute. So I'm one of those lucky guys that was able to tap into a network that has really shaped who I am and shaped my life. Let me start a little bit about my journey. I was born in Chihuahua, Mexico, up north, about 3-hour drive to El Paso, Texas. Most of my family is still there, but I have been in and out of the States for about 15 years. In Denver, Colorado, which is now my home, for about 12 years. And I think when I think about my own story, it's very difficult for me to think about my journey without thinking about my father and my mother, and then thinking about their fathers and their mothers. And one thing that happened to me was very interesting. As I continued to learn more about where I came from, I felt that I had in me very interesting strength that was hidden. And then the more I learned, the more I was able to continue to go and not to give up. And I think that's the emphasis of the company that I'm building, and I'll tell you a little bit more about it. But that second company that I shared with you, it was a company that was trying to replicate the waste management industry in Mexico and Latin America. And we were somewhat successful. We reached break even by the 8th month, $1 million in revenue by the 18th month. We were growing very fast. We got to about 70 employees and we needed capital. And when we found investors that were interested in funding us, they did all the diligence that they needed to do in the business and in me, and I never stopped to do diligence on them. And that's a big lesson that I continue to carry, because then after 13 months of having them come in to our boardroom, I was out because I couldn't really understand the misalignment of values and ethics that I was experiencing. However, that journey brought me to Denver. A mentor at the Unreasonable Institute said, hey, there is a family office in Denver, Colorado that is looking to build their executive team. Would you consider that position? And I said, hey, I would consider any position. Right now, I'm unemployed and I have a 2-year-old and a pregnant wife. But can I ask you a question? And he said, sure. I said, what is a family office? And he's like, well, he explained to me that it's families that created a lot of wealth and have now an office to manage their own holdings. And that's the blessing that I got when I met Sam Gary, who started the Piton Foundation, Gary Community Ventures, and I was the first employee that joined. And what's interesting is that even though I felt that the second startup that I was building was a complete failure, the company is still going, and I'm pretty sure there's money that it's being gained by someone. When Sam interviewed me, he said, Luis, I think you should be a great member of our team. And I said, Sam, I don't know anything about philanthropy, anything about investments. I don't know anyone in Colorado, even though I had been in this room before, but I didn't have a network here. And he said, yeah, we can teach you finance, we can teach you investments, but we can never teach the integrity that you're bringing to our team. It was a very hard decision to be out of my company, and it was the best decision that I have ever made. 12 years after helping the Gary family and meeting beautiful folks like Seth, sitting in the investment committee there, but also helping some of the other family offices that I have been able to help. 12 years in, I couldn't remove the entrepreneurial bug in me. And so I decided to resign in September last year and decided to build again. And the reason I did that was twofold. One, first my wife told me, don't you have PTSD from the other company that you, why do you forget? I said, yes, but I think this has a lot of heart and is really connected to who we are as people and how we need as a society to remember where we come from and to go back to connect with each other as human beings, not seeing color, not seeing privilege, not seeing all the boundaries and all the barriers that we put systemically in front of us, So that's the emphasis now of the company that I'm building, which is a platform to help us tell stories, not only about ourselves and our families and connecting with each other, but also to share insights and advice to future generations. So when I was invited by Brad to this panel, I was very excited because I feel very hopeful. I feel very hopeful to be here tonight with you guys, to be here tonight with all of you sharing this panel. And there's a lot of statistics about how people of color are just grittier and moving forward and raising the hand and speaking up and saying, there's huge opportunity in the population that we represent. Only Latinos are 20% of the population of this country. It's the third fastest, the group that it's growing 3 times faster in the States, and it represents $3.2 trillion as of today for this country. So when I think about the future and when I think about this conversation, there is a ton of barriers that even I am facing with the connections that I have to build this company, and there's a lot of hope and a lot of opportunity. So thank you again, and thank you for introducing me, and I can't wait to join the conversation today.
So thank you, Luis. And now for the formal response. You already know Sherrard from panel number 1. He's doubling up. So be careful. He might just show up on all the panels today. So please take us away.
I mean, everything that he mentioned, I couldn't agree more. I think the fact where you come from shapes your DNA, and it, going back to the panel number 1, it develops that grit so that you could go through the adversity and still have a possible outcome, a positive outcome. So with that point, I'm in total agreement. I don't have anything to go against right there.
All right. So how about I'll seed a little question for you, because I know we've got something to mine in there from you. So we've been talking in session number 1 about a missed financial opportunity. Why aren't these investors getting it, that they can get better returns by investing in more diverse teams? But what we're hearing here from Luis is focusing on concepts like heart and integrity, right? We're not necessarily just focusing on financial outcomes. Do you see a connection between those two? Is there a direct connection between running a business with heart and integrity and having a good financial return?
1,000%, primarily because how are you going to give your investors the proper returns that they are looking for if you don't have integrity to, make sure that you're not avoiding certain things on your profit and loss statements, or, talking about a certain amount of users who are not true paying customers, but on your financials, you have them as paying customers. A lot of integrity comes through that. And a lot of entrepreneurs, they want to get that investment. And sometimes they look away from keeping that integrity. You don't know who knows who. And I think entrepreneurs need to keep that in the top of mind.
Thank you. Okay, so let's introduce our other panelists, starting with Jay Elise. So Jay is a CEO at Prospect Consulting. And also, I just want to underscore your role in supporting the New Venture Challenge high school track. So talking about supporting founders right from day one. Thank you for that. And let me introduce Kevin as well, and then I'd like to ask each of you to add your voices to the conversation. So Kevin Allen, as I was teasing you earlier, great branding. I will never forget that you have launched the first BIPOC focused startup accelerator in Colorado. That's Access Mode. I've talked to you once, and it's like, it's in my brain now. Also an investor, so welcome. And maybe Jay and then Kevin, your thoughts on supporting our underrepresented founders.
I mean, I think the conversation here is extremely robust and necessary. And I think the underlier that we're addressing is the humanity behind entrepreneurship. There are people running businesses. And irrespective of their cultural background or the diversity that they bring, it's important to highlight that diversity is more than the skin color, right? It's race, culture, class, thoughts, all of these different factors that contribute to a more robust ecosystem where collectively we bring something to the table. And to your point, Luis, and even to Mark and Sheila's point about building a story and focusing on who you are, right? I think it's imperative to recognize that who we are as individuals stems from our cultural identity. The way that we show up as entrepreneurs stems from what we've been told, the stories that have been told to us, the narrative that either we have written for ourselves or other people have written. And so we sort of formulate our thought process behind those things. But it's imperative to recognize that those things that are often seen as divisive things, the things that separate us based on a number of factors, are actually the tools to get the job done more efficiently and better, right? When the people on your row don't look like you, but they have a wealth of experience to add to a venture or to an idea or to a community, there's richness in that. And I think our individual stories contribute to a collective history, a collective movement going forward. So it's exciting to know that entrepreneurship for women, minorities, that it's expanding. There's a lot of wealth in that.
I love that. So I've had the benefit of a lot of different kinds of experiences. And Luis, when you said, you know, you're interviewing for a family office, you said, what is a family office? I can relate. And I think that brings up my first point about how we can help. We take for granted that we know things sometimes. And I know this is the internet age and you can jump on a phone or a computer and you can find things. You know, I remember, you know, I went to Wharton as an undergrad, right? And the only reason I went to Wharton is because my dad and I looked around and I said, I want to do business. What is business? I don't know. But I wanted to do business and Wharton was the best business school. So I applied. Was fortunate enough to get in. Showed up on day one. Didn't realize that I had never heard the term investment banker. Didn't know anybody who had bought or sold a stock or bond. Never heard of a consultant. What does a consultant do? Like, people are paying money for what? For advice? I had no idea. And yet I'm in school with the sons and daughters of managing directors at JP Morgan and Smith Barney, and who are talking about venture and are talking about starting businesses. So here I am that had gotten in, like everybody else, on my merits, but now I have extra work. I was also an athlete, by the way, which was not helpful from the extra work perspective, as Siobhan understands. So now I have extra work. I gotta figure out, before I go interview with Lehman, what a trader does, how a stock or a bond works. I gotta go to a class where my classmates understand what a corporate bond is. And I gotta figure out why corporations need bonds. What is a bond? Like, how does this work? People give money and I don't understand. That gap is real. And that gap happens in every category of our situation, right? And that can't be taken for granted, but it doesn't mean that somebody doesn't have the talent to execute and to make money and to build a business, and we have to get over that. I think the second thing that you spoke about was culture. Again, deeply rooted in this country is they call it whitewashing of cultural identity. Native Americans, send them to schools, cut their hair, made them speak English. African Americans brought here, first thing they do, no language, no culture, no name. Completely change who you are. You're not speaking English in this country? Speak English. It's what we speak, right? It puts people in a position to have to change who they are in order to get what they want, regardless of what they're able to bring to the table. That is the wrong way to think about it. What we are and who we are is what's going to make us successful. Having to overcome the things that we have to overcome is what's going to make us successful. Showing up as your authentic self and not having the stress of having to figure out, how should I wear my hair for some of the ladies, right? How many African Americans or folks out there have gone to a predominantly white school and have people touching your hair because they think you're a, wow, how does that work? All of these things are little micro traumas that we all go through as underrepresented people. And now we have to bring that to a world that is even more unlike us. I think the key to success, and something that I preach and something that I try to coach folks to do, is to show up and be authentic. Because at the end of the day, people are gonna say no. For whatever reason, they're gonna say no. It can't be because you're you, right? You have to find people who are gonna respect you for who you are, because I can tell you, it takes the pressure off everything else. It's hard enough to be an entrepreneur, to be an investor. Don't change yourself to do it. And I think that's kind of a starting point, something fundamental to me about how we sort of overcome where we are and start to move the needle a bit.
And I'll just add something. Thank you. That was awesome. A quick anecdote and then just a reaction. The anecdote is after 18 types of visas and 15 years living in this country, my wife and I and my oldest became US citizens in November last year. Thank you. And now I have the fortune or misfortune, I would say the fortune, to vote for our next president, but also to vote for our next president in Mexico in the same year. So it's like very surreal. So because the options are a little bit in both countries. Anyway, when we were doing the raise your right hand and do your oath, the person that was guiding my ceremony said, remember that now you kind of do your oath of allegiance to the United States, and you need to understand that you need to leave your culture, that you need to forget, no, he didn't use the words forget, but you need to put all your country and all your heritage below. And you are now a US citizen. And when I had that, tears began rolling. But I was doing this because I wanted my 13-year-old to have the same opportunities as my 11-year-old who was born here. It was very difficult. And what you said, I'm like, yes, like we continue to do it, even in formal settings. Yeah. And then when my wife did her own ceremony, same person, different, same group, but different person who spoke, she said, bring all of you. So same words, same oath, but the person was so authentic in the way that she spoke that she said, this country is built when you have diversity. Bring all of it. Bring your grandma's recipes, bring your restaurants. We want it all. And when I was hearing that, I also cried, but of joy. I'm like, it's the same freaking procedure, but it's because of a person choosing to be authentic and being real, and another person choosing to follow the freaking rules of this system that is completely dividing us. So as an entrepreneur, I couldn't agree more that the more authentic you are, the more you will stand up. The more you know your story, the more strength you will have. So yes, please, be yourselves, know yourselves, and speak up with whatever acento you have, because it's your superpower.
For dropping us straight in, and so let's keep going with this thread. It's easy when we talk about cultural whitewashing or sort of induced forgetting of our heritage. It's easy to talk about that as that's that thing that happened then or there. But how about right here in our community? What are we missing? Like what are we doing to create or not catch early enough these gaps, right? So that when our kids go to school, they don't have to catch up quite as much, right? And when we go to an event, we're not thinking as much about how am I showing up? You know, how do I look? How do I talk? How am I different? In our own community right here. And I want to, this is for the panel, but this is a question for everybody, because this is really a community question. So if anybody would like to flip this around and raise something that the panel can respond to, please do.
I'd like to make a comment. When we talk about trauma, generational trauma, cultural trauma, gender trauma, when we're looking at all that, it's not that we're not showing up as being authentic. It is the fact that there's so many layers upon layers upon layers of trauma that at times we don't even know. So my question is to our VCs, people that support, people that want to help us level the playing field. How do we be informed about trauma? How do we be educated about that? Because some of us have been lost, right? We have been wearing the mask on top of the mask on top of the mask. Is it my age? Is it my gender? Is it my culture? What is it that's going on? And that impacts the way that I show up as an individual. It's not that I don't have the talent, is that with great trauma, there's great gifts that come along with that, right? But yet, how do we come to the authentic, to start taking off that mask? How do we get to know ourselves? That you're right. You know, as a woman, Rocio, I've spoken with consultants. Don't wear your hair curly because it doesn't look professional. Straighten it out, right? I've seen that, I've heard that, I've experienced that. And how does that impact us from us bringing our authentic self, right? That we have hidden ourselves so much. So from an educational perspective, yes, we get to educate our children at a very young age for them to have that purpose, security, protection, love, understanding, sense of belonging, right? That starts once the child is born, right? That this is a community effort. This is an entire village. This is an entire country moving together. So how do we bring in trauma-informed leadership into everything that we do, into VC, into education, into every aspect of our world?
It's a wonderful question. Certainly invite any panel responses, but Rocio, I want to put it back to you if you're willing. What would you advise the community here? What do we look for in somebody who needs that additional support, who maybe, you're an entrepreneur, who maybe is following a similar path and who needs to be supported and uplifted to take that step?
Thank you. And I would say, for me, is get to know thyself. And it's until we get to know our own adversities, our own path, what's happened with us, we cannot understand what other people, we can't get into their shoes until we really acknowledge where we've been ourselves as leaders. And then to help them in such a subtle way that we're not pointing things out. We're not pointing out fingers and saying, hey, well, you're not doing this and you're not doing that. We get curious about people. Like, hey, start asking questions. For me, what I would love to see in VC is for people to go through leadership coaching, trauma-informed leadership coaching, individuals to go through their own process. I feel that it's an opportunity for investors and everyone in general to go through and understand why they do what they do, how they do what they do, transcend what they need to transcend these generations of trauma that have kept us captive. And sometimes the worst prison is not the prison that has bars. It's the prison of the mind. He who teaches people to free themselves mentally from all these traumas can benefit from all those gifts, because a lot of people who come from adversity, we come with great gifts and we want to show up. We just don't know how. And we're not even aware of that.
Thank you, Rocio. I'd like to ask and invite Kevin, you to respond. You're working with founders day-to-day basis. You're bumping up against many of these issues. What do you see?
Yeah, so that exactly is why my co-founders, Annetta, Kelsey, and I started Access Mode, the accelerator, because we had both been through accelerators, Techstars and others, and with wonderful curriculums and wonderful opportunities. But every day it took extra work a little bit to show up as we thought they needed us to show up. So it felt like we weren't showing up as our authentic selves. And I think we lost something, each of us in those experiences. So we started Access Mode so we can build a community where people could feel like they could show up like their authentic selves, and that has become our secret sauce. It is unbelievable to see the interactions in our cohorts. You can be yourself, but you can have a discussion about your business and you can support each other in ways that you can't get, because when you walk out of those access mode doors, nobody looks like you, or not very many people look like you. It's harder to touch those communities, right? Or to pull somebody aside. And so we felt like access mode, in terms of beginning to start that community, is where the juice is gonna be, and so far so good. I also think that, you talk about trauma, as ethnic minorities in particular, we have sort of been pitted against each other in this country. I had a conversation today with an Asian Pacific Islander organization, and they were like, why do we hate each other? First call, right? Black and brown communities being thrown up against each other in these small spaces in cities all over this country, fighting it out for this little bit of territory that they redlined, by the way, to give to us, right? And where we settle. Why? Why? Same background, same socioeconomic problems. And so there's another layer, right? Even amongst ethnic minorities that was created by the system, right? In large part, that we have to overcome. So by putting everyone together in the same room, and as you said, talking about each other, like, hey, I don't know your community. Talk to me about it. I don't understand this. Talk to me about it, right? I think that is very healing and very empowering, particularly for minority entrepreneurs. My hair is out today. Usually it's braided. And I do it on purpose. And the first time I did it, I was working on Capitol Hill for a congresswoman. It's part of Sarbanes-Oxley, for those of you of age, understand what Sarbanes-Oxley was. And so I was called to Capitol Hill by actually a congresswoman who actually was my mother's best friend in college. And so I grew up with her. And so she's like, I need your help. And so I was making a decision, and I said, all right, I want to wear my hair in braids, because I was going to business school after that. And I was like, is that okay? And she looked at me, are you going to be stupid tomorrow after you get your braids in? I said, no. She said, well, do what you need to do. And what was interesting about it was I got more looks from other African Americans than I ever did from anybody who was not. Because they saw me, so a white male saw me as like, you're just black. And my black, whether you're a criminal or a lawyer, is the same. But African Americans saw me as exposing them, exposing their culture. And that shouldn't be. We should be embracing these sorts of things and people showing up the way that they are, the way culturally that they've been taught and raised, because that difference is actually what made America what it is. It is this is an immigrant nation at the end of the day, period. And that diversity of thought created the entrepreneurial spirit that literally built this country. And now the country's trying to take that from us. And we are in a position to stop it. But we have to do it, each of us as individuals in our daily lives all the time, every day.
I would add to that. I think that that's an incredible point. And to your point too, I think that there's also a responsibility and an accountability that we have to take for ourselves, where we challenge the things that we've been told or the traumas that we've incurred, and understand where those came from first. Because it's really easy to throw around jargon that puts the onus on somebody else or something else, or a cultural divide or a label or a term, without understanding where did that first come from, and how does that perspective change, one, how we show up as individuals, but two, how we receive other individuals kind of in our sphere. When we lead from a place, as you said, knowing thyself, right? We are a little bit more confident and a little bit more prepared to take on the challenges that we know are going to happen, the things that we're going to be told that are different from our counterparts. But when we choose to receive information, whether that's constructive criticism or criticism otherwise, it helps prevent us from losing sight of the things that make us our authentic self, or prohibit us from becoming something that we're not. I think, Bryn, to your first question that you sort of asked to the audience, was how do we change? How do we get earlier access, right? And one thing I want to say about CU Boulder, and specifically, right, talked about the High School New Venture Challenge. One thing that is a critical speaking point is earlier access to entrepreneurship. And not only for students or young people, but people of color, women, it's creating an opportunity early on so that they're not figuring it out at 25 or 35 or 45. It's saying to the 9 and 10-year-olds, maybe you look different, maybe you sound different, maybe your cultural identity is different, but you have the same opportunity if you're willing to apply yourself, if you're willing to listen, if you're willing to sort of understand how your diversity and difference makes you special in this space. And further, for the High School New Venture Challenge, we had the winner of that. They're on the spectrum. That's not something you see. And so I think diversity, again, is not just the color of our skin, but it's these variables that we have to address as not only critical points and problems to solve, but recognition in the fact that it's multi-layered and this universal challenge, right? And show up a little bit more empathetic and more understanding.
Luis, I know you have a question, and I think we can squeeze in one from the audience. I know there's a couple people who've been patiently sitting with mics, but Luis.
I'll be brief. Rocio, great to see you. Thank you for that question. We all have a responsibility to going back to our togetherness, to going back to our interdependence. It really doesn't matter what color you are or what level of neurodivergence you have. We all have that responsibility. There was one person in our team in the last family office that I was working with, 25 people. Everybody was globally spread. She was in Austin, Texas, and had a personal experience that had awakened her to the challenge, white woman, the challenge of not being able to deeply listen to others. And she decided to go to the training with Camelback Ventures, Seth, that you mentioned. And she had a very profound experience that then she brought to our whole team. And what's interesting about what happened then, 3 years later, after all of us went through our own process of not only processing the organizational trauma, but the self-trauma that we were bringing into the organization, we changed everything from our sourcing process, investments in philanthropy, to our due diligence process, to the questions and the way we showed up as investment committee members, the way we managed our portfolio, and the way we supported our portfolio towards whatever the entrepreneur wanted to do. And that whole process ended up with all our team, which was always going to like Ivy League, whatever, or like super luxurious ways for our global offsite. We ended up going to the largest favela in Brazil, which we had presence, and spent 3 weeks there listening and just being with the leaders of the favela. That whole experience then shifted the whole global organization strategy to be much more inclusive in multiple ways. So that didn't come from me, or that didn't come from a white man. It came from a white woman with their own personal experience where she said, we need to be different. And 4 years later, the whole organization, globally funding $50 million every year, was completely transformed.
Actually, I want to give you a few stats. Is Stan Hickory still in the room? Yep. Stand up. Stand up, please. We all owe Stan a round of applause for piloting a high school venture challenge last year, getting it funded, pulling it off last week, and having a team on the spectrum win $5,000. There we go. Then that's the support of this community, the ecosystem, the system, and everything else. Another point with Stan. we had this conversation about 4 months ago. We had coffee in Boulder. He said, yeah, I think, maybe 5 or 10 teams. 84 teams from 8 high schools. Okay? 84 teams, 8 high schools. That's a big deal. And in the midst of that, last year, he launched the External Advisory Board Initiative, which I sit on the board with them, and so with Natalie as well. Second point I want to make, Bryn Reese, can you stand up for a second, please? Where are you, Bryn? Are you still here? Bryn, my good friend and consigliere, I guess I could call him. You want to talk about money flowing into the community and making an economic impact? Long Path Technology secures $189 million. Tattoos, soybeans, and video games, 3 startups, $250,000 through OEdit. And FY23 spin out companies through deep tech and ventures, $487 million. The Association of University Technology Managers last year in May, I think it was, Bryn, awarded the University of Colorado top 5 in launching startups. So big hand to Bryn. Now I have to go to the computer thing, and it's asking me for Face ID. That's wrong. Give me a second. All right, so I think you've met a couple people here already. So we're going to skip those 2, and we're going to go to John Weiss to talk about, to introduce himself for a quick second.
I'm John Weiss. I founded an agency called Human Design here in Boulder. I have a background in branding, marketing, and product design, and I also teach a class at Atlas on design.
Excellent. Thanks, John. Michelle.
Hi, everyone. Thanks so much for sticking around this late. I'll keep it super brief. My name is Michelle. I'm an educator and a change maker. Really excited to be here.
So we're going to kick off the panel because I know my friend Natalie has a riff for about 5 minutes on preparedness. And I met Natalie last summer, and the first question she asked me was, yeah, Henry, I like your idea, but where's the data? And I said, oh yeah. She goes, come back and talk to me when you have data. So with that, I'll turn it over to Natalie.
Thanks so much, Henry. It's a pleasure to be here. You're seeing me again. So this panel is going to talk about workforce preparedness and how to build more inclusive environment, which, by the way, what we heard on some of the prior panels, wow, I was sitting back there almost thinking about crying, but I'm not even going to start with the statistics of, why we need diversity and why we need belonging in the workforce. I think we already covered some of that a little bit earlier, and I know we're also over budget on time, and we appreciate you still being here. But what I want to say is that diversity very clearly increases productivity, which ultimately is helping your bottom line, higher profits. Additionally, diverse teams tend to be more creative and better at problem solving. These are from McKinsey reports. We all know this anecdotally. It is so clear. I'm not going to talk about the other stats. What we hear across the board is that employees want stronger relationships, a sense of connection, and to be seen. I'm also going to throw out there, let's also celebrate that difference, that diversity, right, where we're coming from, as opposed to hiding it. And I'm going to share a little bit about my background, and I'm also going to share some stories because, it's not just about the data, it's the qualitative and it's where we've been. And I think all of us in this room, just the fact that we showed up for what the topic is today, I'm guessing we've all faced some things and, heard no. So my background spans Wall Street, private equity, tech, numerous male-dominated environments and roles. And throughout my young career, really lacked that mentorship and sponsorship that I think you really need when you don't look like the executive team, but also when you're building that confidence, which, if I ask for a show of hands, I'm sure all of us in here have experienced imposter phenomenon at some point. I want to share a little bit about, these Me Too moments and the harassment, because again, the qualitative matters, and just know this happens still today. As an analyst on Wall Street, I was asked more than once, when are you planning to find a husband? When do you plan to stop working? Regularly, I was asked, why don't you dress sexier? Why are you always wearing pants? And literally it was to avoid these comments. I thought if I wore my hair up, if I wore the pants, it wasn't gonna happen, but it kept happening. Today, to be able to show up authentically as me, wear my hair long, however I want, show up as myself, it's so powerful. And you've heard that on the prior panels, right? How many people in this room have stepped into that power because they said, I don't give an F, I'm gonna be me. It's not easy, by the way. Please, feel free to raise your hand. You don't have to if you don't want. Love it. And was that really just 2 hands here? Okay. But basically recognizing the confidence in who we are. I learned I was neurodiverse about 3 months ago. And I celebrate that today. And you know why it took so long? Because we pathologize women's health issues. We don't actually treat them or say, hey, this is how it presents in women. To be able to step into who are we? What is powerful? Because neurodiversity isn't just, oh my gosh, I need my boundaries. Oh my gosh, I'm gonna, implode on the energy scale. I can do crazy cool things. I can be an expert negotiator. It's understanding what makes you unique and differentiated and knowing how to show up and celebrate that. And also working in an organization that will support that. So I just want to mention checking the box. It's something we've seen a whole hell of a lot of, excuse me, I don't know if I can swear here, out of 2020. And it's disgusting, right? How many organizations said, we're going to hire a diverse woman to sit in that, people or diversity role? What actually happens? What initiatives are actually doing something to make structural change and to make sure their hiring practices and everything else for how they show up is truly changing the way the organization is representing and creating a sense of belonging for their employees. So there's a really clear lack of gender and diverse representation across influential roles. This is another thing I want to say. If your boardroom, if your cap table, meaning your ownership structure, meaning who is investing in your company, if your executive team all looks the same, I am sorry, you are not going to be able to create a sense of belonging. You're not going to be able to create a environment that hires and retains diverse talent. That's just not going to happen. You need to look at who is in these influential roles. And culture is very much established at the top. If you say to your middle management team, make people feel good, go handle it. Guess what? That's not going to change the organization. The other thing I want to say is people use oftentimes those terms management and leadership interchangeably, and those are not interchangeable terms. How often are your managers not leaders, right? They're not doing the thing that's necessary. So I just want to call out some things, right? Hiring practices. What's happening? How are you showing up? And just because you're trying to put people in seats that look different because maybe you're supposed to do it or maybe it's a box to check, that doesn't mean you're actually going to get quality talent and you're not going to create ultimately that pipeline for investing in those individuals so they can grow, they can get, all those promotions and ultimately get retained at that organization or stay a part of the organization. So really asking yourself, right, what biases are in there and how do you unpack the way that you're operating? I also want to say, and we've talked about this a few times this evening, that facing adversity and hearing no, that can be a tremendous game changer as it pertains to growth potential, resiliency, and how people are showing up, and ultimately the execution that they're bringing. So I will bet every time as an investor on the woman or on the diverse folks that said, I got no, I heard no, I didn't get that platform, and I ended up here, and I'm still doing the thing, right? So recognizing if organizations could actually appreciate, it's not just the 4-year degree, but appreciate the resiliency, the grit, the execution. It's not just about the resume. And then a final note I want to say is investment in employees, in making sure that employees can also be owners. So whatever your ownership structure looks like, if you can give out equity, RSUs, options, whatever it is, I don't want you to make your organization or your employees negotiate for, equal pay or equal wages or whatever it is. I want you to think about how do you create a place and a space where you have a fair employee options pool, where you create a space where you're allowing your employees to feel like they can advocate for themselves. Because yes, I'm an expert negotiator, but it is insane to expect that people without that, crash pad to land on, people that weren't given the same skills around, you can ask for this thing, you deserve this, the hidden, whatever you want to call it, traumas, they're not going to be able to get to that, pay parity. So are you creating an environment where people are going to speak up and ask the questions? And I guess the last thing is, don't forget to coach and invest in your senior leadership teams or your executive team, because if they don't know how to mentor their young people or their people and employees that don't look like them, nothing's going to change. And by the way, after Me Too, I've had plenty of men say to me, Natalie, I want to help and support and mentor young women, but I'm scared. You can't pull back, right? So how do we train and support those folks? So that's what I had prepared.
Whoa.
Just a few things.
So now we're going to move on to Michelle, who has an opportunity to respond, and then I'll toss some questions to the rest of the panel. And what I want you to think about is the role of technology, right? Funders, leaders, entrepreneurs, and their ability to set the pace and communicate in the organization. Transparency, and what are the approaches? And you talked to some of those approaches already. So with that, I turn it over to Michelle.
Thanks so much. I have some notes to read off of to keep things quick and brief. So one thing that I've been hearing a lot today that Natalie also mentioned is the importance of knowing your value and knowing yourself. And I want to really specifically hold space and acknowledge the fact that that's so much easier said than done, particularly for underrepresented folks. As an example, I know of something that I bring of value to a team is I'm a really direct communicator, and I have no problem shying away from difficult conversations or difficult decisions that need to be made. That same characteristic has had me gaslit in spaces where people have told me that I shouldn't be as communicative or I need to change certain things about me. So I believe in myself and I have confidence, yes. And there are spaces that daily actively work towards making me think and believe that I shouldn't be bringing those things to the table. So I think it's twofold. One, yes, you have to know yourself and believe in yourself. And two, each of us has a responsibility to actively speak out against things that are happening in the workplace that even maybe seem minute, that are going against having an inclusive workforce. We can't just want inclusivity when it's easy and fun. We have to also want it when it's hard and difficult and when we're being challenged. That's one thing I want to bring up. Secondly, we've been talking a lot about systemic and large issues that no one individual or company is going to solve, and certainly not overnight. And still, I think it's really important that many of the panels have been talking about what individually we can do and what companies and organizations can do to really set the tone and set the bar. So I want to offer a little bit of a glimmer of hope that there are folks that are doing the work. So as an example, IBM has a full-time, full-paid apprenticeship program specifically for folks that don't have a four-year college degree. What an innovative way of recruiting incredible talent and entering a really difficult field that is different than how others in that industry might think of it. In 2023, Colorado was ranked 49th out of 50 states when it came to the lowest paid teacher starting salary. In that same year, a school district in Colorado called KIPP revamped their entire pay structure to increase base pay for all staff, including teachers, by 12 to 17%. Their staff are 50% BIPOC. Their executive leadership team is 2/3 BIPOC. So there are people that are on the cutting edge side of doing right by what needs to be done right by. And so what can we do in our respective network systems, ecosystems, to continue that?
Excellent. So I've seen John nodding his head and Mark writing notes. So I'm going to pass it over to John to give us a few of his thoughts, given that he's in advertising and he sees a lot of companies that are diverse and he's got a lot of products that he has to talk to the marketplace in.
Yeah, I don't know where to start because tonight was a lot of really good conversation. There's a lot of things that are pretty deep and pretty thoughtful. I'll get to that in a second, but just one general comment. What's interesting to me is it feels like there's this bifurcation of a group of people who've made it and a group of people who are trying to make it. So owners, businesses, VCs, they've made it. Entrepreneurs, college kids, they're trying to make it. And I feel like that's just this really interesting fragmentation that if we could figure out a way to do away with that, meaning we're all trying to make it if we're putting in the right effort. There's this concept in Japanese culture called shushin, which is a learner's mindset. When you enter the room, even if you know you may have the most information and be the smartest person technically in the room, you still don't show up that way. You still show up with the intention to learn and to learn from those around you. So I think just a general concept is, you're hearing these things of like, what can entrepreneurs do? How do you portray courage and that you work hard and you're gonna be of value to these businesses? And I think that if you're going to have that standard for that group of individuals, you have to have the same standard for businesses. And I think in general, there needs to be a lot more courage and risk-taking and hard work put at the leadership level, as much or more than we're expecting from entrepreneurs and college kids and people on the come up. So that's just a general comment. I feel like there should be this idea of evolution on both sides, not these people made it, these people are trying to make it, how do we connect them? We're all just trying to make it. And that's just a general comment. And then in terms of organizational preparedness and how we're working with brands or ourselves, there's kind of this idea of, I just wrote down mindset, not method. And, businesses could deploy methods. They could deploy practices, they could deploy ways of thinking as methods of how do we increase our diversity? How do we bring different thoughts into our business? But I think it's more of a mindset. It's not a method, it's not a playbook, but a mindset. How do we deploy empathy? How do we think outside of our existing construct? How do we think outside of our existing bubble? So in our category, advertising, creative, one thing that our industry does a terrible job of is inserting diversity in a very systemic way versus a very targeted way. What I mean by that is agencies like Human, what typically you'll do is you'll have a new project come in, you need to staff up for it quickly. What do? You go to your existing networks because the timeline's very short, the budget's pretty tight, the client needs this in 2 weeks. So what do? You go to your existing networks. If you're in Boulder, Colorado, and you have a certain network, you're gonna go to that certain network. And you have to start thinking outside of that. How do we think outside of, it's not good enough to hire one person from one community to insert into your company. I think that's a start, but how do you start to insert multiple people from multiple communities and multiple projects? And how do you create it, institutionalize it into all of your projects? So last thing I'll say, because I'm getting very long-winded, but in our industry, it's not good. The first thing you do is you call up Susie, the copywriter, Joey, the designer, because they're a known commodity. Joey's gonna design illustrations I need. Susie's gonna write the copy that I need. We're gonna get it done. We're gonna make the client happy. The next project is where we'll add diversity. And it's always the next project. And something I think has to change fundamentally at that level. So, and we historically had not done a good job of it. And so what we tried to do is reach out to an agency in New York City called Monday Talent. And they're placing diverse talent at scale. So how can we partner with them? So now we've increased our network capability through Monday Talent. So we can at scale, instead of calling up friends and family, reach out to an organization that has way broader reach than what we have. So I know I got long-winded. I think the biggest thing for me is just, it's really interesting when it's like, how can these people think different, entrepreneurs, et cetera? Both sides need to think completely different.
Let's take any questions from the audience for the panel before we move forward. So Chris?
I think we'd be remiss as an audience if nobody brought this up. We talk a lot about VCs and general partners and LPs, but for those of us who are underrepresented, neurodivergent, woman, minority owned, if you target a company that receives federal funds, they have a 5% appropriation budget that they have to have set aside for women-owned and minority-owned businesses. That is another key. Your director of technology has just as much access, depending on the size of the company, as a VC or a general partner, and has needs, active needs. Think about a director of technology's requirements. increase profitability, reduce cost, increase efficiency, or overall enhance the capabilities. So if your idea can do that for that director of technology, you're going to increase their career prospects. They'll become your best friend. The challenge with that is that we also don't have a lot of mechanization of sales operations, marketing operations, business development, which becomes revenue operations, which begins the process of developing relationships with those companies. I think if we can solve that fundamental access to that level of process, then if we hook entrepreneurial ideas up to this engine that helps develop relationships with those 5% appropriations, then we could get far more funding. You're a lot closer to getting funding from Lockheed Martin than you realize.
Any comment from anyone on the panel? So what question, Chris, would you have for the panel out of that?
Begin the process of giving people training for that. So I happen to have business development background as many others have. How do we give people access to the training to understand the strategy and tactics that are required to develop relationships with customers? If you just focus on the VCs, you're going to miss the boat that, hey, there's a director of technology at JP Morgan Chase that might like your idea and may have $500,000 of discretionary budget to get your paid pilot off the ground. You don't even have to give up equity. So how do we mechanize that for the underrepresented in a way, programmatically?
Yeah, so I think that's one of the questions at the end of the evening that we're going to ask ourselves, right? So what do we do next? And we'll ask the audience to participate. So thank you for that question.
Henry? I think there's a significant challenge that a young entrepreneur would face approaching a corporate, a multinational, a global company. So many ways in, no idea who to talk to. So that is a significant challenge. In a lot of ways, your small venture capital firm of a few people whose names you know are more approachable. And we've seen over the last 2-3 decades new ways to make that happen, whether they're incubators, whether they're pitch competitions. You know, you have a generation now that's familiar with venture capital in their teens. Seriously doubt Henry and I were talking about venture capital in Holyoke 40 years ago. You know, I would agree with you. I raised money from a strategic. In finance terms, that's a corporate. I didn't get it from a VC. I got it from actually a technology company that saw what I was doing and thought, hey, that's really interesting. And for them, the $3 million that they invested in me was marketing money. You know, so that's a very good and a very real point, which is, you know, it isn't just VCs. There are companies out there that are mandated, required based on federal monies that they receive to look further afield. But it's still a huge challenge. And I would put back and say, okay, well then you need the same kind of environment and discussion around how do I approach corporate entity with an idea that I have, and have that discussion and have people on the panel and folks who've done it and folks who are trying to do it, things like that. Fundamentally, I think one thing is important for any entrepreneur, for any individual, is there's a reason it's called a narrative, because you have to narrate for somebody your past to the present and then begin to talk about what's ahead. And so a lot of the career coaching I do just focuses on getting individuals to get really good at telling a story about themselves. And then on top of that, telling a story about why they have a passion to do something. But you don't naturally just get to talk to people about yourself and go on and on and on for an hour. No one's going to give you that time. But that's a structured interview. And what we don't realize in the investment world and in VCs and in venture capital investing is that most of your interactions are unstructured. They're here. They're not interviews. You bump into someone. And an astute VC is listening and asking questions. And you may not be aware of why he or she asked what they asked. So again, take it all the way back. How do I work on my narrative? How do I narrate somebody through who I am and where I've been and where I am and where I want to go, and get good at that? If you can do that, then some of these unstructured conversations will go better, because you'll let that person know who you are, and they'll come away with a better understanding of you and what you're trying to do. And there'll be follow-up. You know, you own the follow-up, by the way, but that person will respond the next time because they'll have a better sense for who you are.
So we're going to take one more question from the audience. And the reason why we're doing that is it's 8:20 now, and we have a commitment to get everybody out by 8:30, and I'm going to stick to that commitment because I'm an operations kind of guy.
There you go.
And then Brad's going to come back up, so.
Yeah, okay, there we go. So I thought it was very interesting what you said about storytelling. So does that mean that it all just comes down to storytelling? Because sometimes like a lot of the students that are, I know are in like the entrepreneurial space with me, we face that issue of like, oh, we have this problem, but the people we're presenting in front of can't relate, or maybe they're not in the same age group, so they don't have the same experience. So I guess how do you balance that like authenticity versus having to change your story to make those people understand who probably wouldn't understand?
So you described two environments. One is if I'm pitching an idea or something, and then another is I'm narrating, I'm talking to someone. So I'm going to take that second one. I'm narrating, I'm talking to somebody. That happens so often that a lot of times I just see individuals who don't really understand what it takes to just really communicate with an individual about yourself in a nice, concise way. Not long-winded, but just a nice, concise way that allows the conversation to happen after what typically starts as interrogation. They ask you a question, and then you freeze, and then you try. I think all of us here can relate stories of being in environments where we were cognizant of, this is a place where I'm an other, and now how do I bring myself to that environment and not risk whatever, brought us to that. That's hard. There's really nothing easy about that. But I think as a professional and as an individual who ideally wants to be an entrepreneur or believes they are that, you do start with, like I said a minute ago, am I an entrepreneur? Am I a founder? Am I a joiner? Let me tell that narrative. Something happened that made me want to be that. How do I narrate the person so they understand that, okay?
Quickly, I just want to jump in on that one too, because I think that if you're not showing up authentically as you, and you may change the story a little bit, right? Based on getting in the door, starting the conversation. If you land the wrong investors, or you're working at the wrong company, or you're trying to be somebody you're not going to be excellent. And I think, with diligence and the way investors are thinking about allocating capital, they're going to get to know those founders, right, before they write the check. And so if you're trying to represent or be somebody else, that kind of comes through. And so I think that authenticity, and again, you can change some of the asks and, some of how you present, but ultimately we're going to figure out who you are.
So with that, I'd like to thank the panel. And bring Brad back up to close us out, because I know he's got thoughts because he takes notes and I didn't.
If you guys want to stay, I'll try to wind up. So I think one of the hopes that Henry and I have for this event is that not only do we have an opportunity to have a really rich, robust discussion and learn quite a bit, but we also ideally might find some paths forward in terms of building the community in the days, weeks, months, years ahead. And so I heard 5 pretty interesting puzzles at least, some of which have ideas already in them, and some of just require some hard thinking and further research and some potential good topics for future panels and conferences. So the first is one that I think John teed up, but also came up again and again, which is the startup community relies so heavily on informal networks and informal information exchanges. And there are fantastic things about that in my estimation. It's really easy for an early entrepreneur like Manshita, who just asked the last question, to connect with Mark and get his expertise, and you don't want a formal legal agreement, you don't want compensation, you're not worried about him ripping off your idea. That's pretty cool that that's the way this works. But it also has a downside that you were just talking about, John, which is who do we tend to rely upon? The people who are already in our social networks. And there's really interesting questions that we look at inclusion. What can we learn from the social network literature about how to maintain the best parts of that informality while disrupting them and introducing more people to the entrepreneurial community? So that's one that I'm particularly interested in, and I appreciate people's discussions. I think that's one puzzle. Second is, I thought from the capital panel, a really interesting question about the role of GPs as in between what I call the VC sandwich. At the end of the day, the limited partners are the pockets of money that happen in venture capital and fund private equity. At the bottom are the founders, the entrepreneurs who are taking the risk to build these companies. And in the middle are the general partners who put together these funds. And the urgency around the comment that if you don't have diverse general partners, that is, in the middle of this sandwich, if you don't have diversity, you're not going to get adequate funding to entrepreneurs who are starting ideas that are not necessarily the ideas that are that look like the sources of money, that look like the sources of capital at the top. So that's a second puzzle that I thought was really, really interesting. The third is, I think, a fascinating question, which is the 3 F's came up. Mark, you helpfully defined that for us: friends, family, and fools. And when you have early stage ideas, look, this is really hard, right? Building, 10 billion people on the planet, I've got the best idea, my company's going to win, right? It's a tough enterprise. And if you've got a rich aunt or a rich uncle, they're willing to lose money on you sometimes, right? And they're willing to be that fool to provide bridge funding. Well, that really breaks along lines of generational wealth. And as we look at questions like the one that Seth posed, which is why don't we see more people chasing that alpha, I think there's an interesting question to explore. Well, it may because in this bridge of between I've got an idea and I can prove that it's working, that's where we see friends, family, and fools kicking in, and that's where there may be some real work to be done. So that's a third question out here. Fourth question, and here I'll stop. I think I said 5. I'll stop at 4, which is Kevin Allen really teed up an interesting point and it powerfully said about the historic perspective requiring someone to change their identity in order to get what they want. I think that was his language, which I just thought was such arresting language. And the transition that he is encouraging and embracing, which is embracing authentic parts of our culture and bringing all of you there. And I think there's a really interesting question when we think about the language and methods of entrepreneurship and ways in which that becomes a glue that allows for us to bring our best selves to the workplace in certain startup environments, as well as ways in which our existing language and methodology of entrepreneurship may frustrate that. And that's something, a really interesting question to consider. We at the university, or at least I at the university, talk about entrepreneurship as a language that allows the business person to talk to the engineer, to talk to the JD, to talk to the liberal arts and science. Interesting question. In what ways is entrepreneurship that language that allows us to talk across different cultural backgrounds as well? And in what ways does that potentially frustrate? I think that's a really interesting question that came up tonight as well. All right, so with that, I want to give a special thank you to this panel, but also our guest MC and organizer tonight, Henry. We've got some desserts next door where we'll take the conversations. Please help me give a warm thank you to the panel. And Henry, thanks for being here.